Hello, hello, hello. Happy Fed Speak Tuesday. How's everyone doing? Good morning, Strong. Is my camera okay? Let me see. I had to adjust it yesterday for. Let's see. Let's see. There we go. Had to adjust it yesterday for Ninja. Adjusting it back. How's everyone doing? Good morning, Sterling. Already said that. Sterling putting all the pieces together. Inverse head and shoulders on Bitcoin. Bitcoin taking off with the potential Ethereum ETFs getting approved. Good morning, Ro. Do I give any class on your trading style? When you mean I'm gonna work on recording some new ones. We might be able to do some live if enough people are interested. Just let me know if people would like some live classes. It's a little hard to do in the morning, but if you follow along enough with me and listen, you'll also get the gist of it. But I was going to put together some other key things for people to help them out if I think enough people are interested in that. Good morning, McRangers. ASML TSMC can disable chip machine if China invades Taiwan. They just disabled them. That means they'll fry them. Yeah. Anybody think China's not going to go after Taiwan? Good morning, Martinez. Good morning, John Schmidt. What else do we have? What else? I'm just looking through this. Yeah, Klaus is stepping down. Good morning, Jacob. Hey, Ted. Haven't seen you in a while. Ted's interested in live classes. Hey, Anissa. How are you doing this morning? Good morning, Royal Palms. Good morning, everyone. All right. We'll wait for some more people to filter in. We got Redbook this morning coming in still decent number, 5.5. You can we're in an uptrend on Redbook. Because the consumer hasn't completely tapped out yet. Has not. Then we have a ton. And absolute. I mean, we had it yesterday. Are they saying anything different? Really, we don't need this. We don't need this. There's nothing. More mic is always recording. More mic is always good. Well, I don't know about that, Ted. Oh boy. But we've got Barkin, Waller, Williams, Bostic, Barr, Bostic. Bostic's actually monitoring the panel. I think it was Bostic that was monitoring the panel with Collins and Mester. So you have a Fed moderator for Fed speakers. All right. And then tomorrow we got the FOMC meeting minutes. But other than that, it's very quiet. Look at this. Look how quiet it is. I guess a quiet day, they have to fill it up with speaky speak. Some of the chips pulling back a little this morning. Stone always putting that other information. Market's looking a little tired and toppy. We have Macy's and Lowe's earnings that came out earlier. Let's just do a quick refresh. What the? Oh boy. What is going on here? Why is that in a different... All right, we're going to do with... I'll fix that later. So far we got healthcare, and then everything else is pulling back. Healthcare consumer defensive is the only thing slightly up. Everything else pulling back. Fed watch still barely hanging on that 50% level for the cut in September. Nothing's changing there. Fear and greed still solidly in greed mode. As I said, we have Macy's and Lowe's and AutoZone. Not really. Macy's was a beat. Lowe's was a beat. Stock really isn't moving much. Last time I checked, tomorrow we got Target. After the close, we got Toll Brothers. It's just one of those days. So, night mode, yes, it shifted, but I didn't change it. So, Fed's Waller further increase in policy rate are probably unnecessary. I need to see several more months of good inflation data before being comfortable to support an easing. Several more months. What is several? because several more months to me would put it beyond September. Thanks for putting that in, Sterling. What else? We are no longer hearing about difficulties in supply chains. Our hope is that goods deflation continues. Their hopes. Their hopes. They're hoping. Is hope a plan? It's like hoping your trade's going to work out. That you just added 4 times because you were unwilling to take a loss. We still have a potential double top in the S&P. Really clinging to this 4-hour rotation zone. So I'm watching if we start breaking below about 53.16 going into the open, and then it's still the low from Friday. That's key, 53.0575. We close below that, at least on a 4-hour basis. We'll start watching for the bigger pullback. Other than that, going into the open, 53.35 is key first upside level, and then we're looking at about 53.45. If it breaks, if something happens, but this is really looking tired, but we don't trade off the way it's looking or feeling. We're trading off of our patterns. If it breaks higher, 53.65.50 is the next harmonic up. Remember, daily cycles are rolling over, heading down, but still so far a sideways correction, not even a pullback correction. Weeklies, we're getting into that tired toppy area, but so we'll be going into next week, especially after Memorial Day, watching for a more substantial potential rollover. NASDAQ, barely hanging on to the potential double top. Again, a long way off from triggering. Right now, around the open, I'm looking at about 18,695. We start breaking below that. Minor level for me is going to be 18,665, 670. More significant is 18,615. The trigger point to actually trigger to double and get a bigger pullback is 18,545. You can see it came up here, did not hit the final, and that would have invalidated the potential double. Actually, it would not have, because that's not a correct anchor point. That is the correct anchor point. I thought something looked off compared to my other trading platform. 18,787. There we go. And then 18,814. Those are your 2 correct levels. So, still sitting up there. If we do break above, going into the open, about 18,750 is key resistance that it's got to sustain above, and then back to 18,787 and 18,814. Other than that, if it does pull back, you see, remember, these still potential doubles are against the rotation zone. So these are at least short-term potential pullbacks only. Now, the Dow did trigger. You can see here on the 4-hour basis. The Dow did trigger and is just moving sideways still. Those targets are 39,837, 39,778, 39,719. The last target, if you look, is just below the 4-hour breakout zone. Other than that, the invalidation point is still 40,116 on a closing basis, so a long way off right there. Russell, if we start breaking below 2095, we'll start watching the bigger pullback into about the 2082 area. The only thing for me with the Russell for bullish, it has to start getting around 2112, or we have to get a shorter bottoming pattern, and we do not have one yet. Okay? We don't have a shorter term bottoming pattern, so it has to really show some strength unless we get that shorter term bottoming pattern. What else do we have here? Hello, Charles. It's a clown show. It's a clown show. So you say you need multiple prints, but then you get one print to assume something. It's a clown show. All right, I'm sorry. Bostic's not in a hurry to cut rates. I want to make sure that policy easing is unambiguous. You can't use that kind of word this early in the morning. You can't use unambiguous this early in the morning. VIX, well, very low VIX. The only thing at this point is if it starts accelerating, we get trigger some of these doubles and it starts accelerating above 1250. The DAX also, let's just see here, has triggered on a 4-hour basis this little mini double top. Targets 18,621, 18,564, 18,508. The invalidation point is on a closing basis 18,903 or a trade through basis 18,936. Not much to talk about with the notes. Oops, hit the wrong button. Besides, we might be running up and making a stronger little topping pattern, but nothing key yet. Trading against very significant support right now. The yield, as I said before, I'm watching for a more significant bottoming pattern. We bounce back up against key resistance, against the rotation zone, and against the declining best fit line. That's why I'm watching now for a pullback to establish a stronger base. Other than that, not much to talk about. Dollar index, same thing. We're watching for a stronger base. Remember, the short-term trend is still down. We're trying to form some kind of base here. It'd be nicer, from my perspective, to get a stronger pullback pattern. But if we start accelerating above about 104.50, I'll sit up and take notice. Crude. Remember, confirmed but did not trigger to double. This is now turned into a horizontal channel. So if you're trying to trade breakouts and you don't get the follow through, from my perspective, you got to bail on the trade because it can go into this kind of mess. So at this point, my key resistance is about 79.60. Key support 78 right now. Now we are still without a follow-through trigger on that. It's still, you have downward pressure on this, but we're going into that very, very key support area. So I'm still watching for a longer-term bottom to be put in, but there's not a great setup right now. Natty Gas watching for a topping, at least a short-term topping area to come in, and then a pullback would be a beautiful thing. Remember, we're between the 50 and the 62.5. Beautiful thing if we pulled back to about 245. Gold. Gold trend's still up. The only thing that puts a damper on that is if we trigger this a double that's a long way off. So, from it's still trailing mode. If you're looking at stuff in the shorter term with gold, we've pulled back twice into that 4-hour rotation zone. By the way, here you go with, if you're looking for something else, as long as it starts closing above the last 4-hour high bar, that's a, is that still valid? I know it was earlier. Hold on, let me double check it. Yeah, as long as it closes above that, that's a 4-hour %B buy. And if I was trading something like that on the shorter term, I'd really need this to then follow through on the next couple 4 hours with the close above 24.37. Then I'd start targeting, and this is a short term, then the next target for me would be 24.48 using the harmonics. And those could be areas that are also raise stops because it would not give this a ton of wiggle room to the downside. But that's how, when we get stuff pulling back like this into that rotation zone and rotating back up with the longer term trend, that's a great way to get in a potential short term trend entry. There is very key resistance up here though. That's why I would not give it a lot of wiggle room. Silver. Silver, you still have a little mini potential double top. No, it hasn't triggered. It might get invalidated if it rotates back up. If this price rotates back up, it's then in a triple top, and this has been a sideways correction. Remember, this is sideways. If it triggers a double top, I would not be looking to go short into this kind of move because the rotation zone is right at that first target, but it could be interesting for pullback areas. Copper, still, you have this lopsided sloppy double, which will probably get invalidated today. This is also something that would only be interested for me from a trailing perspective. Now, if you're watching something shorter term, I'd really be focusing on this $5 mark. We start getting a key 1 hour or 4 hour close below that, I'd be watching for at least a retest back to that 480 area. The yen, nothing back in the potential reversal, still watching for that follow through close above 157.09. The markets seem like they're waiting on something. Maybe they're waiting on NVIDIA. Maybe everybody's waiting on NVIDIA. The whole market's set up for NVIDIA. So we still have the potential double, not confirmed or triggered on the euro. If that does trigger, then I'll be looking at some more follow-through strength in the short term with the dollar. But, and if this was an area, really that second target right around 107.90 to 108 is the key target area. What else have I been missing? Hey, Jake, I saw your comment. You want I'll try to set up something with some housing live streams. Pulte just raised their new home base price by 100K overnight in an Indianapolis suburb near me for no good reason. I want to know who's affording this stuff with sane ratios to their income. I know there are people are there, and these 3-2-1 buy downs, they're just gonna. I've been talking to people with these new home stuff, the 3-2-1 buy downs. I don't know if they're doing it around you, but where they're buying down the rate, but they're also jacking up the price, so you're actually paying for it yourself. But and then they're like, oh, you can refinance before your rates goes back up. And my question is, well, you can refinance if you have equity in the home, but if the home price, if we get any pullback, and this is even on, I'll call it the used housing market, brokers just, oh, the Fed's still good. I heard brokers this weekend, the Fed's still going to cut. One person said 6 times this year. I'm like, there's not 6 Fed meetings left unless they're doing double cuts. And they're like, then you'll be able to refinance probably at 4%. I'm like, you're telling the people so you can make a home sale, and then you're not also telling them that if housing prices drop, they can't refi without money out of their pocket again, which most people are over leveraging to still get in a home. I give up. It's going to end in tears. But Fannie and Freddie to the rescue. Fannie and Freddie to the rescue because they are going to do secondaries. Yay. Yay for us. Only key thing I'm keeping an eye on the short term is on the spiders. If, besides the real micro trading levels, is if we get below 527.32, that's going to be key for this little mini double top, and it can even be with a follow through close on a 4 hour. All right, remember you also have a gap left behind. Other than that, the 2 top areas, 531.50 is very key resistance. The Qs, sorry, I'm a bit tired today. The Qs, slight back gap down to yesterday, so the first thing would be to the gap fill right around 454.91, and 455.50 is key resistance, and then you don't have anything till about 458.40. Is this a little mini double on the Qs? Is it still valid? This is where we'll use the reverse harmonics. And yes, it is still valid. So, You still have a potential mini, which would need a 4-hour at least a 4-hour close below 449.54. Caution needed on first cut. Still backs 1 in Q4. So Q4, after the election, this market's got to get its September cut priced out. Realtor, in my opinion, are overpaid snakes. I'm sure there's some good ones out there. I just haven't run into one. I've run into a couple in my lifetime, but a lot of them I do agree. My last realtor, which I used to buy and sell a house, was very good. Very good. I like classes, especially if it's from. Thank you, Kalani. How you doing, Kalani? Thank you for those kind words. We'll have to do something for everybody. We just have to. Bitcoin, after the run up, we got the breakout straight to the 87.5 harmonic, and now the pause up there, invalidating this other double, but setting up again these doubles. If this one were to trigger, watch out, because this one would take it below the weekly rotation zone. Other than that, if you're looking for your higher prices in the good old Bitcoin, we're looking at a cluster at about 75.8 and then 78.170 are your next key targets. JP Morgan dropped 4% yesterday as Jamie Dimon warned stock is pricey and talked about retirement. It has a daily, weekly potential double top. Let's take a look. JP Morgan. Sterling has graduated. Sterling putting the pieces together. Yes, it does. It does. Not that I'm doubting you, Sterling. I always like to check just to make sure. Why are we objecting? Does anybody else have that issue if they're using TradingView right now? Or is it just me? Yeah, that. Look at that, too. Oh, remember, just because it's a thing of beauty does not mean give it the shifts the probabilities. I just find things like this fascinating. So this is on the weekly chart. Now, long way off from potentially triggering. But look what this would take it. This is why I love to put these pieces together. This is why I use a rotation zone. Because if you're looking at this weekly, we got the key reversal last October. Little dip rotation zone. Bigger dip rotation zone. We have, look at the divergence with the RSI. Okay? Look at that divergence. So it made a new high. Still within potential double territory. Divergence. If this were trigger, then look where it could take it back to. The breakout zone. So this, we had key resistance from July of 23. We did that reversal in October. We came up finally breaking above it in December. And then off to the races. But that would take it back to the key support area. Possibly. Again, no guarantees. However, you'd also be below the rotation zone. And you take out a major key swing low. So fascinating. Thank you for pointing that out. You can sometimes see how all the pieces fit together. But just because it looks like a pretty picture, you have to wait for it to trigger. People wonder also, well, I'd want a front run. If the thing I'd watch for, unless you get a shorter term pattern, if we get a close below 180, and this is as long as we don't take out these highs, we start getting a close below 189.21, I'd start watching for rollover plays potentially. Now, we'd still be within that weekly rotation zone. That's why I'd start watching for rollover plays on bounces. Remember, this could take weeks to potentially trigger. But we break below. Look where that 62.5 is. Look where this little low was from the beginning of May. We start closing. That would be a low close if you get below 62.5 on a daily basis, because your low close in May was back from Friday the 3rd. Then bounces, I'd be looking for the rollover plays to possibly front run this move down, because you have the probability shift of that 62.5 close, and we're below all the key elements on the daily. Also, sorry if you don't trade JP Morgan or aren't interested, I'm just explaining stuff so you can try to apply this analysis to anything. Look also where that first target is and the daily 200. Okay? So I would not ignore 168.33. Hope that helps some people. Even if you don't trade stocks, just learn the analysis. All right. Ooh, looks like a. All right, minus below 500 ticks, so moderately weak opening. Moderately weak opening. Your very significant resistance is right about 53.30. 53.30. So to sustain, even to get in a sustained choppy upside, I got to see price action sustain above 53.30 again without some kind of buy setup. Other than that, on the pullback, we start dropping below this 4-hour rotation zone. 53.15, 53.16 is the next target down. What else? What else? I think that we're not going to buy back our stock at this price. There we go. So we'll see. My first chat, been listening for 6 or 8 months. I'm neighbors with Stafford. I'm also a mortgage broker. I just bought a second home. As much as I want rates to come down, I wouldn't count on it. Well, thank you for chiming in, Doug. And thank you for I really appreciate that. Say hi to Stafford for me. I would just buy a second home. As much as I want rates to come down, I wouldn't count on it. Again, chime in anytime you have some feedback on the housing market too. So I'm not counting on rates coming down anytime. They might drop a little. I mean, they could drop back into 6, even the mid 6, but that's not going to make things magically affordable for a lot of people. So let's just take a look at the Dow, because that's the one I'm watching, because that's already triggered the double. Watching for some of these little pullback plays, at least in the short term. All right, with that, I really appreciate it. And if you have any expertise or want to share, a lot of people who tune in here have other primary jobs or other primary careers. If you have interesting stuff that you're watching that you think would be helpful to people, whether it's bullish or bearish, it doesn't matter. Share the information. Help people out here. You know, because more information gives us a well-rounded viewpoint. That's why we don't just look at the bull case or the bear case. We look at both of them. And then we don't trade off that information. We trade off of patterns and what the charts are saying, what the setups are saying. Because you could be as bear, you could say, housing's going to crash, all this, the dollar's going to get wiped out, whatever. The short-term trend is still up. Even on this little pullback, the trend is still up. It's got to do some major technical damage before we start breaking down. And as I said on Ninja yesterday, don't try the top ticket, because a lot of the short-term top ticks are just short-term top ticks. You take the chunk out of the middle, either up or down. Any advice for a 30-year-old guy? I'd keep, in terms of what? I'd keep your powder dry. It's, this time is, I keep hearing, this time is different. This time is different. What did I do? I own no real estate. Do I like to rent? Not particularly, but I don't own anything. Besides my investment accounts, I'm in cash. And even in investment stuff, I'm in a lot of short-term treasuries. Because you know what, I keep my powder dry for key opportunities. And that's in terms of real estate, that's in terms of everything. For example, I sold my place in 2005 and I rented for 5 years. I sold. Again, I don't try to top tick a market because when everybody's rushing to the exit, that's not when you want to rush to the exit. So I sold in 2005, my place in Scottsdale. And in 2004, we sold my wife's place in Phoenix because the market was getting stupid frothy. And then we rented for 5 years. Was it fun to rent for 5 years? No. But look what happened to real estate. Then we bought. You know, we had to move a couple times. So we bought and sold houses. And then I just sold back in April. So again, for me, that's how I look at stuff. I'm waiting for the next opportunity. It's like, in the stock market, long term, we don't have valuation. Short term, now long term, if you're saying I'm 30 and I don't mind to run back through a pullback, so I wouldn't load up here. I'd be waiting for some better prices and stuff. The PE ratios aren't great. The market's looking toppy. I'd rather earn 5%. If you have cash sitting around, earns 5%. Go to Treasury Direct and buy some short-term bills. 5% is not a bad return. Because it's unless the U.S. government defaults, which could happen at some point, but is not on the radar screen right now. So, I mean, they're not going to default in the next couple months going into an election. Earning 5% on your money through T-bills, even over 5%, not bad. You keep your powder dry. Earn something. You don't need to take a lot of risk right now, is my perspective. And for a house, I would not be rushing into the housing market if you're looking to only live at a place for a couple years. If you're saying, okay, this could be a home I'm going to be in for 10, 15 years, that's a different story because it could pull back and then recover. But if you're saying I need to buy something that I just want for the next couple years, I'd look very carefully at that decision. Would I like to own another house? Yes, I will own another house at some point. Again, I don't particularly like renting. But there's no way I'm rushing into something because I don't want to sit through a stagnant or a very potentially larger pullback. Same thing with the stock market. Once we get to very key long-term valuations again and we get to significant bottoming patterns, hey, I won't be erring towards the side of T-bills. I'll be going back all in for the market for long-term capital gains. As long as they don't screw that up with the tax code. Oh my gosh, that's a whole nother story. The government just can't, because they've got to get out of our... boy. All right, sorry about that. You're welcome, Anissa. I think that market is different than today's market. Well, chime in, Doug. So, with that, I have to let me just peek back at the S&Ps. Just sort of a mess. Let me take a look at the tick. Not a strong recovery yet. So far, just a choppier back and forth day. Not any great setups so far on a shorter term basis from my perspective. With that, I will see everybody for tomorrow. Remember, we got Target in the morning, and then what everybody's favorite, NVIDIA, and we have the FOMC meeting minutes tomorrow. With that, I shall talk to everyone later. Bye for now.